We are reviewing an analysis report on BURU Inc. That's ticker BURU. It's a pretty bullish thesis, outlining a potential 4x move to $1 based on a few catalysts lining up in December 2025.
And for a stock currently trading in the low 20-cent range, a 400% target demands, well, maximum analytical rigor. Before we get excited about the potential gains, we really need to focus on what's mission critical for this report's conviction.
Let's start immediately then with what feels like the most glaring issue, the financial backdrop.
While the report acknowledges substantial risks, incorporating the bear case directly into the discussion of the catalysts would significantly enhance the perceived realism and rigor of the bullish analysis.
Okay, so the material does flag the severe risks. I mean, it notes a trailing 12-month net loss of, negative $63 million?
Right, and the dilution risk. Over 434 million shares outstanding.
Yeah, so it explicitly frames the stock as a speculative, a turnaround play.
That's the right context, but the weakness is really in the presentation. The current structure, it isolates these severe financial risks in a totally separate section.
Right, it's almost like a disclaimer you have to get through.
Exactly, a detached disclaimer you scroll past before you get to the good stuff. For a high-risk penny stock, one that needs a 4x move just to hit that psychological dollar mark, the potential pitfalls aren't a liability you should hide.
They're the whole context.
They are the entire context. They're what dictates the urgency and, frankly, the necessity of the bullish catalysts.
I understand the instinct, though, to separate the bad news from the good. But you're saying for a turnaround story, the risks really define the stakes.
Precisely. So the suggestion is to use the risks not just as boilerplate warnings, but as the driving force that mandates these catalysts have to succeed. We want to transform the analysis from just hopeful speculation into a blueprint for the company's survival, for mission-critical execution.
So let's talk about that $63 million loss and the massive dilution threat. Why is isolating those numbers so detrimental to the bullish case?
Because at a 24-cent stock price, any traditional capital raise, which is the standard way you cover huge operating losses,
it's a disaster.
It is catastrophic for existing shareholders. You are diluting the stock base at the lowest possible valuation. You're basically wiping out value just to keep the lights on.
Okay, so if that's the existential threat, how do we use reason number one, the Lyocon acquisition, to directly address it?
Well, the report currently notes that acquisition as, a tangible expansion into European engineering.
Which is fine.
But it misses the analytical opportunity.
It really does. You could argue the deal's swift closing, expected by December 31st, is essential because successful integration gives them an immediate, non-dilutive pathway to revenue.
And manufacturing capacity.
This acquisition has to be framed as the tactical maneuver needed to mitigate that urgent need for a damaging capital raise, the very dilution risk that was flagged. That framing makes the acquisition feel less about, say, strategic growth and much more about tactical survival. It gives the news real weight.
And it applies just as much to reason number two, the defense pivot. Take that extreme net loss, negative $63 million. We need to explicitly link that enormous burn rate to the pivot.
Okay.
The analysis should argue that pivoting into defense tech is the only plausible way to transition from a massive cash-burning laser R&D firm to a government-aligned contractor with significant, long-term, stable revenue.
The kind of revenue needed to reverse that massive loss?
It's the survival mandate. That's what it is.
I do wonder, though, if by focusing so heavily on a survival narrative, we might inadvertently turn off some investors who are looking for a clean growth story. Is it possible the original structure was an intentional choice to appeal to a more optimistic momentum crowd?
That's a fair point. It's a fair point on investor psychology. However, momentum traders in the penny stock space are highly attuned to binary risk events. A successful 4x play here must overcome the clear and present danger of insolvency or terminal dilution. There's no way around it.
So by showing you grasp the threat?
By demonstrating that the analysis fully grasps the magnitude of the threat and has identified specific, credible countermeasures, the catalysts, you build massive credibility. You turn those red flags from risks into analytical requirements.
So if the catalysts succeed, they don't just facilitate growth.
They facilitate survival, which is a far more powerful narrative driver for a stock trading this low.
That's a powerful differentiation. The execution has to be framed as corporate life or death, not just good business strategy.
Yes. And now that we've established those life or death stakes, let's look at that second driver, the defense tech pivot. Because if it's the required solution, The report needs to show it's actually executable.
Right. So the report needs to move beyond the general hype factor of defense stocks and provide clearer operational specificity regarding the immediate, measurable objectives of the TechnoSpa partnership. The material highlights reason 2, the execution of the first tranche of the Techno Financial Program in November 2025. It aims to develop a vertically integrated defense and security technology hub, and it makes a strong case for the blue laser in aerospace. Of moving into defense is the catalyst.
Right, but to justify an explosive stock reaction, the analysis has to offer more insight into the deliverables of the current program. You can't just wait for some unspecific government contract to drop in the distant future.
So the critique here isn't about challenging the pivot itself, but challenging the depth of insight into the procurement process. We need to know what tangible milestones are being hit in late 2025.
Exactly. And building on that, we know the defense procurement process is notoriously slow. It's segmented. The suggestion is to focus the analysis on the proof of concept or the qualification stage of the pivot.
That shows a deeper understanding of the timeline.
It shows analytical depth, and it makes the whole narrative feel more grounded than just hanging the thesis on a huge eventual NATO contract.
This is a common flaw in speculative reports, isn't it? A focus on the huge potential rather than the immediate steps needed to unlock it.
For sure. So how do we make the deliverables concrete for a high-tech laser manufacturer? Instead of focusing on the $100 million deal 3 years from now, investigate what that defense and security technology hub is tasked with producing right now in the immediate near term.
Ask what that November 2025 financial tranche is actually for.
Exactly. Is it for qualifying the blue laser manufacturing process for a specific known aerospace standard, like an AS9100 certification? Or is it for developing a specific prototype defense component, like a specialized heat sink for a fighter jet?
That shifts the focus from an abstract future promise to a tangible, measurable milestone that investors can track and verify by the end of 2025.
That is the key to making the story stick. Let's look at the unique technical advantage of the blue laser.
Its ability to weld reflective materials, copper, aluminum.
Right, with far greater efficiency than traditional methods. So shift the focus from a general government deal to hypothesizing a more specific initial target.
Like a pilot program for maintenance.
Or production of components where this specialized ability offers a direct national security advantage. For example, the rapid repair or manufacture of high-conductivity components for, say, electronic warfare systems or specialized drone batteries.
That level of specificity allows the report to argue this technology solves a current pressing operational gap in the defense supply chain. Precisely. It turns the narrative from they might get a contract to they are actively positioning their unique, qualified technology to solve a known military capability deficit. That provides a clear, measurable metric readers can track in the short term. It gives the catalysts real weight.
We need to define what the first hurdle looks like so the market can accurately price the odds of clearing it.
You've got it.
Okay, so we've established the existential mandate for survival by integrating the financial risks. We've sharpened the execution plan for the defense pivot with operational specificity. Now let's turn to the overall architecture. The report relies on 3 distinct pillars: the acquisition, the pivot, and the technical setup. And presenting the acquisition, the defense pivot, and the technical setup as 3 distinct reasons weakens the overall argument. The report should synthesize these factors into a singular, interdependent chain reaction necessary for a massive momentum rally.
Okay, I will say the material makes a strong case for the technical gap fill. The chart setup is compelling.
It is.
The price needs to break above 30 cents, and there is notoriously low chart friction between 30 and 60 cents. It really does set the stage for a dramatic rally once that resistance is cleared.
That chart observation then is excellent, but the weakness is that the report treats the fundamental news and the technical chart as parallel, as separate things.
So the chart is a curiosity, and the news is the driver.
Right. But for a stock to move 4x in this environment, the fundamental events have to be the specific, sustained fuel that ignites the technical breakout. It has to create a coordinated, unstoppable momentum surge. It shouldn't be, here's the news, and oh, by the way, look at the chart. It has to be this coordinated news flow will cause this chart action.
I see the need for synergy, but if the goal is to attract high-velocity momentum traders, doesn't overcomplicating it with an interdependent chain reaction risk overwhelming the reader? Maybe keeping the technical setup simple, volume in, gap up, was intentional to minimize complexity?
That might be true if we were talking about a 50% move.
But we're not.
We are analyzing a thesis for a 400% move to $1. That requires sustained, almost continuous volume and buy pressure. A momentum trade this large needs validation. It needs narrative structure. If the technical breakout just happens on noise, it fades instantly.
So the suggestion is to restructure the argument, illustrate the compounding, sequential effects of the catalysts, explicitly map how the fundamental narrative takes hold, and how the technical setup enables it.
Yes, exactly. We need to create an explicit narrative sequence. The report should argue that the anticipation and then the confirmed closing of the Lyocon acquisition, that's reason 1, is what generates the required spike in trading volume, which is reason 3.
Ah, okay.
That sustained momentum then provides the specific buying strength needed to break and hold that critical 30-cent resistance level. Then you emphasize that the lack of chart friction between 30 and 60 cents is only exploitable if the positive fundamental news provides continuous fuel.
Meaning the acquisition closing and the defense pivot gaining that measurable operational traction we talked about.
Yes, if the news flow stalls, the stock falls right back into the gap. This transforms the technical gap from a passive curiosity into a dependent opportunity that validates the success of the two fundamental drivers.
So the synergistic relationship between all 3 points has to be presented as the core engine for that explosive move.
It has to be. The reader needs to see that 3-part synchronization as the necessary mechanism for such a dramatic rally.
This process has, I think, really elevated the material. It's moved it from a list of promising factors to a highly rigorous interdependent investment thesis. We've turned potential red flags into mission mandates, general optimism into operational specificity, and parallel observations into a coordinated momentum engine.